Ladies and gentlemen, your event will now begin. Jeff, please go ahead.
Thank you, Zach, and hello, everyone. My name is Jeffrey Metz, and I'll be your moderator for today's webcast, titled How to Accelerate Your Payments Transformation While Cutting Your Data Security Costs by 50%. This event is brought to you by Credit Union Times and sponsored by Very Good Security, BGS. Welcome to today's presentation. Before we get to the topic, let's get some simple housekeeping items out of the way. This event is completely interactive and incorporates many of today's social media tools. You can tweet or directly post information to your Facebook and LinkedIn page right from the console. You don't have to open your browser to do so. Just scroll along the bottom of the screen and click on the social networking widget of your choice. In fact, we encourage you to do so. Also, if you have a question for our speaker, please enter it in the Q&A widget on your console. We will get to your question during the event or during the live Q&A at the end, depending on time. We will answer as many questions as possible, so we invite you to ask away. If we don't get to your question, you may receive an email response. In addition, there are some other customizable functions to be aware of. Every window you currently see, from the slide window to the Q&A panel, can be either enlarged or collapsed. So if you want to change the look and feel of your console, go right ahead. Lastly, there will be some poll questions sprinkled throughout this event. When one comes up, just click on the response that best matches your experience, and we'll look at the results shortly after. Now, let's get to today's topic. PCI compliance is a challenge to payments transformation. Card issuers, particularly fintech card issuers, are realizing the value of owning their data to not only enable their payments transformation and to avoid vendor lock-in, but also to accelerate their innovation to better position themselves to monetize it. With us today to discuss this is Hoang Leong, payments leader, Very Good Security. He's responsible for the overall card issuing and payment strategy at BGS and has launched or helped launch successful credit programs for East West Bank, Visa, and Wells Fargo. Hoang, it's great to have you with us today, and I look forward to your presentation.
Thank you, Jeff. Good morning and good afternoon, everyone. Hopefully you guys can hear me fine. Just a little bit more of my background. So while prior to VGS, I was in your shoes running a credit card program or a card program. I was head of credit cards there, helped launch a de novo consumer credit program, as well as a de novo small business credit program. Prior to that, I spent some time at Visa, was the lead product manager to launch a Visa Infinite, which is a consumer credit platform targeted at high net worth individuals. And also spent some time managing debit cards, where I launched the campus college debit card program for Wells Fargo, and that was a lifetime ago. But let's just get started. So today, I want to talk to you guys about payments transformation and how we can leverage the data and turn it from a liability into an asset. So we're just really quickly, so part of the agenda today, we'll be covering trends that are going on in payments, roadblocks to innovation, and we're going to cover data ownership, why it's important. And then as we cover data ownership, there's a burden when it comes to owning data, especially when it comes to payments data, and in this case, card payments, which is PCI scope. So we'll talk about that burden. We'll also touch upon lightly about PII, especially since PCI scope doesn't really touch upon PII. And then lastly, we'll cover how VGS can help, one, to de-scope you from your PCI burden, two, accelerate your innovation, and three, what type of value we can bring to you. So just really quickly, so some of the trends that are going on today in payments transformation. So according to Deloitte, modernizing infrastructure for new offerings and revenue streams is critical. They are also saying that investing into cloud and digital technologies to help migrate risk and regulatory scope is key. Other things are they are seeing more collaboration that's happening between fintechs so that they can continue the payments evolution. So today, I don't know if you guys seen the press release, Stripe, which is a traditional, I guess, a fintech payments player, they have partnered with Goldman Sachs as well as Citibank to be offering banking services to their merchant clients. In addition, yesterday they did mention that Stripe, I think a part of their division, Stripe Capital, will be supplying small business loans, and I think it'll be starting in the near future, probably early next year. So those are some of the things that are going on where there's a collaboration between fintech and traditional banks. So Accenture are saying that traditional payment players cannot survive without a complete overhaul of existing systems. They're also saying that fintech and bank fusion is a powerful mutual dependency. So it's clear in the example of both what Stripe, Citibank, and Goldman are doing. And then as innovation is happening in payments amongst financial services, fraudsters are also innovating too. So it's critical to stay a step ahead of those guys. And with Visa, what they're seeing is that the usage of online and mobile-only bank has increased by 7 percentage points since 2006. Since this data point came out, I'm sure it's increased even more, especially during our situation with the global pandemic. And then in addition to that, they're seeing more APIs being made available so that it's easier to accelerate the innovation piece. So roadblocks to innovation, right? So according to Accenture, even though traditional players are being forced to reimagine their payments ecosystem, even today, the majority of large banks across the world are burdened with legacy systems at their core. This has become the primary roadblock to innovation and attaining scalability and agility of implementing new payment models. So what they're effectively saying is that the existing ecosystem and infrastructure does not help with innovation because there's a heavy lift to be able to integrate new features, functionalities based on the legacy systems that were implemented in. So very similar to telecom, where you're jumping from one level of technology to the next, there needs to be an overhaul, and it's very costly. So a lot of financial institutions are weighing the cost benefits, but also is there enough resources out there to make that push to reinvent the infrastructure? So Accenture is also saying that as innovation is happening, you'll see more increased real-time transactions. But as you're seeing more of these real-time transactions happening, you're also potentially introducing potential new threats for real-time fraud. So that's also something that needs to be considered as you weigh out how you go about your payments transformation as well as your digital transformation in trying to bring about features, services, and products that are relevant to your member base. So I'm going to hand this off to Jeff, and we have a poll question.
Thank you, Wang. And so the first poll question that we have, again, respond as best matches your experience. Do you rely on your issuing processing platforms to provide your PCI compliance posture? And it's a simple yes or no. Go ahead and click on the bubble that's next to your response and hit the submit button, and we'll take a look at those responses shortly. So let's see here. We do have some people responding. Again, go ahead and just take a couple quick seconds to respond, and we will take a look at those results. Okay. Again, do you rely on your issuing processing platforms to provide your PCI compliance posture? And it's yes or no. So let's see here. Just take a look at those results. And okay, so it looks like we have a very committed group with us today. Wang, is that about what you see?
Yeah, that's about what I see. Because there are larger financial institutions out there that do have their own CDE environment where they're able to provide their own level of PCI compliance and house the data in-house. But that's a very costly endeavor, and only the very largest of the largest financial institutions are able to pull this off. So this is to be expected. Okay, so if we move to the next slide. So the reason why I even asked that question is because as in my previous experience with East West Bank, I also, when we launched the De Novo program, what I found out initially was, we didn't have a PCI friendly environment, so we weren't PCI compliant. So in order to get my product out the door quicker and get this, increase my speed to market, I had to rely on my issuing processing platform. I won't name the issuer processor that we use, but we use the issuer processor and we leverage them for PCI compliance. As a result, what I didn't know at the time was I basically handed them pretty much ownership over my data. Now I would be able to access my data when needed through their reporting tool. I didn't have access to all my data. And sometimes when I would use their tool, I would get back a PDF form. It wasn't something that was usable for me to do analytics. And if I needed anything deeper, then I would need to submit a project or consulting request and pay for those reports. So that ended up being a barrier for me to really understand my portfolio and be able to manage it appropriately. So what I want to highlight here is innovation really starts with data. And you really need to have that data so that you understand what your cardholders are doing. So for example, right, if you have the data, the payments data, you can understand how your members are behaving through their purchases. And you can also understand how those behaviors are changing. You might have a pattern over time of how they have their purchase behavior. But all of a sudden, if you see an anomaly, you can see changes happening. And that will give you an indication as to potentially what their needs are, right? So by understanding what those needs are, you can offer the right products, services, features that meet their needs now and in the future. And it's also important to be able to offer those new services or products within context. So again, innovation starts with data, and it really doesn't end with the payment itself. So I'll hand it off to Jeff, and we have another poll question.
That's right. Thank you, Wong. And do you believe you are extracting value from the cardholder data? That's our next poll question. Again, please answer it as best matches your experience. It's another simple yes or no. So just click on the bubble that best matches your experience, and we will take a look at those results. And the question again is, do you believe you are extracting value from the cardholder data? I'll just take a look in a couple seconds. Okay. Okay, it looks like we have one or two more responses coming in, and we'll just take a look in a second. Okay, let's take a look at those results. So it looks like we have a dissatisfied group here. Wong, is that what you see as well?
Yeah, I mean, it's pretty much what I expected, right? It's really hard to extract cardholder data if you don't have access to it, if you don't have ownership over it. But also at the same time, I see organizations are, they're too lightly staffed, they're too thin to even worry about that. So this is what I expected. So if we move to the next slide, so data ownership, right? And I think data ownership is really important. And there needs to be an understanding of how any financial institution can tap into the value of the data. But in order to be able to tap into the value of that data, you need to have full access to the data, when and how you want to use it, which requires full ownership over your payment data. And again, it allows you to offer the right value proposition to drive more spend and wallet share, allows you to cross-sell other products and services to deepen your relationship with your members, and it allows you to modify your value proposition so you can meet your members' future needs. And I'll give you an example of how we did it at East West Bank, or how I wanted to do it at East West Bank, right? So basically, what I needed really is be able to understand my cardholder purchase behavior. What's really important to them? What do they use this card for, right? And so one of the things that I wanted to implement before I left, didn't get around to it, was on the small business card, right? So one thing I wanted to do was be able to see who they're spending with, why they're spending with, who's important to them, right? So I think with many cards out there, especially credit cards, they give you the standard rewards. They give you like X points for this purchase and this merchant category code. And it ends up being that everyone pretty much has the same card. So you want to be able to differentiate a little bit. So what I ended up uncovering was, well, for the small business customers that we had at East West Bank, their favorite merchant, the top merchant spend month over month was Costco. So what I was able to do or wanted to do was be able to implement a spend and get program, meaning that if my small business customers were able to meet a certain spend threshold, that I would extend to them a free Costco membership. We did a little bit of research on this, and it scored extremely high on this, that yes, they would use that card and make it their primary card, giving it top of wallet status to be able to attain a free membership, executive membership to Costco, right? And for my consumer cards, it was a very similar approach, but their favorite merchant was Amazon. So instead of giving them an Amazon membership, I would give them, instead of giving them a Costco membership, I would give them a Amazon Prime membership if they spent $20,000 a year using my card, right? So then it kind of, the research showed that they were willing to shift their spend over to the East West Bank card so that they can get the Amazon Prime membership. So in some sort, it's kind of a gamification framework. And so that's one thing about adding the right value proposition. The other thing is, as you take a look at the data, some of the value you can find in it would be such as changes in spending behavior. And I'll give you an example. So I'm not a small business customer. You know, I use my consumer card much of the time. And so, you know, I recently made a bunch of big purchases, and it was an anomaly. I bought some windows at a window shop because I'm going through remodeling, and I made some big purchases at Home Depot. All this within a couple months, and these were big purchases in the neighborhood of $3,000 to like $6,000 per purchase. And normally, when the average consumer goes to Home Depot, they might buy a hammer, they might buy like some equipment, maybe in the neighborhood of a couple $100, but not in the neighborhood of several $1,000s. So what does that show? That shows I am doing a huge remodel, probably at my house or something like that. So what my bank can do is be able to take a look at that behavior. They already have all my information. They can do a soft credit pull and be able to extend me a home equity line of credit to help me with my remodeling. So that's one way you can cross-sell products in real time, in context, to be able to meet financial needs of your members. So again, the payment data is as valuable, if not more valuable than the payment itself, because the completion of the payment only gets me a couple basis points, right, of interchange revenue, right? At most, maybe, you know, a handful of dollars for that single transaction. But what the data behind that transaction can tell you is that perhaps I need another product. So in the case of a HELOC, I can actually generate revenue from that cross-sell that has more value than that single payment transaction. Okay. So the road to ownership over your sensitive data, right, will help you understand your members' needs and behavior. But in order to have that ownership, or I should say the benefit of that ownership, is that one, it gives you full access to your payments data. It gives you, and then in order to have that full access, you need to have a comprehensive PCI security posture, right? So the PCI data in itself is very sensitive and needs to be protected. But in order to be able to access the behavioral data, you need to be PCI compliant, right? And this is where, when I asked earlier, do you rely on the issuer processor for your PCI posture? Because if you do, they house all that data, and getting access to that data is extremely difficult. right? But if you have the PCI posture in your environment, then you own that data and you can use that data anytime, anyhow you want to use it. All that data is available to you. You just need the time and the resources to be able to tap into that data. But there's a burden, right? If you're going to bring it in-house, there is a burden of securing that sensitive data, particularly when it relates to PCI, right? It's a pretty heavy burden that can be very costly, not only from a budget standpoint, but could be very costly in terms of time and resources. So just to give you a high-level overview of what the PCI burden is, there's basically 6 goals that the PCI requirements are trying to help any card issuer achieve, right? And within those 6 goals, there are 12 requirements. So the first one is build and maintain a secure network environment. What does that entail? It entails installing and maintaining a firewall. It also entails making sure that that whatever vendor you're using to supply your software or your technology solution, that you're not using their default passwords and parameters, and that you're customizing it to your own network environment. 2, you need to protect the cardholder data. So it means protecting it while it's in storage, and also protecting it when you're transmitting that data. The third goal is maintaining a vulnerability management program, and that implies that you need to protect all systems against malware and make sure that you regularly update your antivirus software. It also means that you need to develop and maintain a secure system. The 4th goal is to make sure you implement strong access control measures. So that will require you to restrict access to cardholder data by a need to know or a business need to know. You need to identify and authenticate any system that's accessing that data. And you also need to restrict the physical access to the cardholder data, meaning that you need to make sure that the physical hardware that's storing this data is secure. And the 5th goal is to make sure you regularly monitor and test your networks. That means tracking and monitoring all access into the network. And it means to regularly test the security systems and processes. The last goal is to maintain an information security policy. So this is where things get tripped up, because the InfoSec policy is a living document. So as employees' responsibilities change, as employees get introduced to the organization or leave the organization, that living InfoSec policy needs to be updated. So there's a poll question here. I'm going to hand it off to Jeff to ask our next poll question.
Thank you again, Huang, and thank you, everyone. I do want to remind everyone that we are about the halfway point of our presentation, so if you have any questions on anything that came up earlier, please go ahead and submit that question into the Q&A panel on our widget on your control panel. So the question we have right now is, do you rely on your internal CDE environment to house your card payments data? And again, yes or no, just go ahead and click on the bubble that best matches your experience, and we will go ahead and take a look at those results shortly. And so just give you all a couple seconds. Okay. Get some results in. We'll just take a few more seconds here. And again, it's do you rely on your internal CDE environment to house your card payments data? Okay. Okay, and it looks like, so we didn't really get any responses on that. Huang, do you, does that surprise you, or how do you respond to that?
Yeah, I think based on the responses earlier on the other poll questions, this makes sense. It probably means that those on the call that do have a card program do not have an internal CDE program environment because they rely on their issuer processor to provide that PCI compliant posture. So this totally makes sense. Okay. So we just went over the 6 goals of the PCI DSS compliance requirements as well as the 12 requirements. So if you distill that into what it means for any card issuer, it means that once a year, there needs to be a QSA audit. And once a year, that self-assessment questionnaire needs to be submitted in order to remain compliant. Right? This is a pretty heavy burden. It takes a number of resources, anywhere from, if you have a large team, you can probably pull it off in a month in terms of gathering all the evidence and so forth that's needed to complete the audit. And for those that have smaller organizations, it can take a couple months. And then on a quarterly basis, you're required to do a vulnerability scan of your entire network. And then any remediation that comes out of that scan needs to occur, and the documentation needs to be updated. What it also means is there is an ongoing management and maintenance that's required if you were to maintain your own PCI environment. One is to make sure that your firewall and your malware software is updated. 2 is ensure all software applications are updated and secure, making sure the InfoSec policy is updated, because that's a living document, as we just went over that. And then lastly, there is a periodic audit monitoring logs, but one thing I wanted to mention was that every time you introduce a new application, especially if you have your own PCI environment, every time you introduce a new application or you introduce new code, a vulnerability scan is triggered. And then the remediation of that scan is triggered as well. So this is why you see a lot of large banks, or also a lot of fintech, your traditional issuer processors like FIS, TSYS, or First Data. They kind of steer away from agile methodology. They do their product releases once a quarter to line up with their PCI burden. Right? So if they were to do it more frequently, it means that they would have to take on a much heavier burden. So just wanted to go over how many financial institutions address their PCI scope. So the first one is they're non-compliant, right? And what ends up happening is there's a lot of financial institutions out there that aren't aware that they're in PCI scope, right? So only, and I'll give you an example. So many of these, financial institutions believe in the myth that PCI only applies to credit cards. And the reason why that might be the case is the PCI requirements came and were introduced roughly 2005. Debit cards and credit cards were already in place, particularly, debit cards. And PCI compliance certification was only enforced after that fact. So wasn't enforced retroactively. So many financial institutions are under the premise that it only applies to credit cards, including East West Bank. When I was at East West Bank, their debit card, they stored debit card information, but we didn't have a PCI environment, threat compliance environment, I should say, right? 2, they're non-compliant because, in order to be PCI compliant, there's a huge cost, not only from a budgeting and resource and time perspective, right? And they think that, the costs of being PCI compliant actually outweigh the risk and the fines. And then we have a second group of financial institutions that are partially compliant. So they selectively measure the risk and reward for each channel, because it's not only where you store the PCI data, but it's also the different channels that are receiving or capturing that data information. So if you have a call center that uses the 16-digit PAN to identify and authenticate someone, or if you have an IVR, that needs to be secured too, right? And then in addition to that, many financial institutions have an understanding or a false understanding that PCI compliance is a one-time event. So that's why only 29% of companies out there that are in PCI scope are compliant a year after they complete the validation. And also, if you take a look at the financial institutions, pretty much that same number applies as well, right? And the other reason why the last reason as to why they might be only partially compliant is because, once they uncover that the ongoing maintenance is too much, it just becomes too much of a burden for them to keep up, right? The last bucket is there are financial institutions that are fully compliant, right? And they're fully compliant because the risk outweighs the cost. And two, they have the resources as well as the budget available to do it themselves. And three, they outsource their PCI posture. And they're, unwillingly, or sometimes willingly, they're okay with giving up ownership over that data. Now, when we talked about PCI compliance, but PCI doesn't really touch upon PII data and why that's important, right? So why is PII important? So we already talked about PCI not touching PII data, but also PII is important because in order to monetize your data, it requires PII. Because as you're understanding the behavior of certain accounts, you need to be able to tie it back to the individual so that you know who you need to extend, either new features, new functionality, or new products to, right? And then PII data also requires you to meet state privacy laws. So for those that operate in certain states that have new privacy laws, such as California, New York, I think the state of Washington is another, PII data needs to be secured. So as the years go on, we'll see more and more states introduce new privacy laws to a point where we might have a national standard of what those privacy regulations may or may not look like. Right. So I also want to talk about the implications of PII theft. Right. So one breached PII record puts any financial institution at risk for account takeover or ID theft fraud. And the average cost to remedy an ID theft is a lot more than it is to remedy one lost record of PCI, right? So the cost to remedy a PII theft is roughly around $1,300 to the individual themselves. It takes roughly around, on average, 7 hours of time to remedy the situation. And then there's a reputational cost that's much higher, than a stolen PAN, right? So if you have a 16-digit PAN that may have been breached, to replace one PAN, depending on your volumes, is anywhere between $3 to $5, right? But to be able to help someone remedy a lost PII record, it's much tougher, right? So 74% of the data breaches out there were actually caused by ID theft. And then 26% of the total records that were stolen were actually PII records and not PCI. Okay. So there is a cost to PCI scope that I wanted to go over. So I touched upon budget, resources, and so forth, right? So typically, and these are in broad strokes, of course, right? It really depends on the size of your institution and also the bench strength of your organization as well. But on average, for financial institutions to do it themselves, meaning that to build a PCI compliance environment. Typically it takes anywhere between 9 to 12 months. When I was at East West Bank, we got estimates from our internal IT team that it would take anywhere between 12 to 15 months to build a PCI compliant IT infrastructure. We were also quoted that it will cost about $1.2 to $1.3 million. So it's kind of in line with these industry averages, right? So the development cost is roughly $1 million, and then there's ongoing maintenance costs of roughly $250,000. But this is only the hard costs, because this doesn't include the costs that's associated with FTEs that are required to support ongoing and as well as an annual audit efforts. And what is lost in all this is the opportunity costs, right? So by having a PCI environment internally, it actually could slow down product development, which increases the opportunity cost, right? And earlier I talked about every time you release new code or you introduce a new system or platform, you have to do a vulnerability scan, right? So the second option you can do is you can outsource it, right? But outsourcing, it really depends on the outsourced solution you're going for. So, there's a lot of PCI solutions out there that would say it's API-based, right? So these API-based solutions will provide you some sense of security and some sense of protection, but it won't fully de-scope providers, and it'll limit the access to the data as well, okay? In addition to this, there is an incurrence of consulting fees to generate custom reports, right, when you rely on potentially other vendors to house your data. And also, in addition to this, for those of you that rely on issuer processors to provide you a PCI environment and house your data in a compliant way, there's potential vendor lock-in, right? Meaning that when it comes time to re-platform, one, either they own the data, but if you have rights to your data, you have to go through a full data migration, which introduces a very painful project that can take anywhere between 3 to 6 months, sometimes longer, right? So that's also an important consideration as you consider outsourcing your data. It's like, one, do they own your data or do you own your data? Two, how easy is it to port your data over, right? And I want to introduce you today a third option, which is VGS. So VGS, very good security, provides PCI level 1 compliance in less than 30 days. And we can save over 50% from a do-it-yourself project. And what I mean by this is that there's very little that gets introduced to your network. It's just a few lines of code in order to implement VGS into your network. We provide you a network level protection. So it's not API based. We actually shield your entire network from PCI scope. Two, VGS manages the ongoing maintenance. So anytime there's an update to the software patches, we provide that support. And VGS also provides white glove service to accelerate the annual audit certification, which means that the effort that your operation team need to go through in order to provide documentation, evidence gathering, and so forth, for the PCI audit and QSA, VGS does that on behalf of our clients. So effectively, we can reduce the self-assessment questionnaire by like 90-95% because we'll pre-fill that for you. There's really only 5% of that, for you to do. And we've actually, for one of our customers, we implemented our solution and we got them to PCI level 1 in 30 days, right? And that includes getting the attestation of compliance in their name. So not only do you get all this white glove service, compliance, but you also get to own your data, and you can port your data to anyone, because as the data is being protected by us, we're giving you a copy of the data, and we're and which results in that you can take that data if you decide to re-platform from one issuer processor to another, and you can port that data anywhere you want, right? So it kind of makes the whole data migration a lot smoother and a lot easier. And lastly, if you ever decide to leave BGS, just point us in the direction where you want us to transfer and migrate that data, and you can do so. So just really quickly, this is a diagram of how we help our issuers and how we help them de-scope their enterprise from the PCI standards. So what we do is we effectively act as the layer between the card issuer and the issuer processor. So in order for you to get a copy of your data from the issuer processor, you need to have a fully compliant PCI environment. So what happens is as that data is flowing through, that payment data is flowing through the card network and into issuer processor, either you keep all the decisioning and all that data in-house at the issuer processor, or you can have them pass that along. But they will only do so if you have a PCI compliant environment, right? And what we end up doing as they pass that data on to you, we actually intercept that data at the network level. So think of us as kind of like a VPN, right? We intercept that at the network level, and then we place that sensitive information. So in this case, the example would be a 16-digit PAN, and we replace it with an alias. Some people might call it a token, but it's an alias. We vault that sensitive data. We give you that alias in exchange. And if you were ever to, let's say, need to get access to that sensitive information, like that 16-digit PAN, like let's say if you have a loyalty platform provider that you need to send a file to, just send that file to that loyalty platform provider with the aliases, and as it's exiting your network, we take those aliases and we replace it with the PAN and the raw to your third-party service provider, assuming that it's PCI compliant. So lastly, I just want to show you how fintechs are actually taking advantage of the VGS infrastructure to help accelerate their card issuing, but also for them to take more control so that they can innovate, right? So we actually, because we're a data security company, we handle more than PCI. We actually handle PII information as well. So we help our fintech issuers during the onboarding process. So this starts from the very beginning when you intake the application. So we have iframes where we can securely capture all that data that is normally captured with an online application. Now, as that data is being submitted into the network during the onboarding process for KYC, AML, underwriting, and so forth, we will shield our fintech issuers from that sensitive data, such as the SSN, the date of birth, and so forth. Now, what they really don't really need that per se, but what they need is the data that the SSN and date of birth helps unlock, right? So then if they need to do an identity check, we can send, what they'll do is send the alias to whoever's doing the identity check for them. And as they're sending out that alias out the door, we replace the aliases with the SSN, date of birth, and name, and so forth, pass it on to their vendor, and the vendor will pass back the information that's needed to do the ID check. Same thing with the credit bureau hold, right? We will send the SSN, the name, date of birth, address, all that PII information to the bureau. All the financial institution or the fintech needs to do is send out those aliases, and as it's exiting the network, we replace those aliases with the PII information in the raw so that the bureau can identify the right report to pull and send back the data that's needed so that the issuer can complete the underwriting and complete the onboarding process. So up until this point, there is zero PCI data that's introduced. Once that application is approved and onboarding is complete, that file gets pushed out to the issuer processor. And that's when PCI data is first introduced. So once that gets pushed out, what we do is we can help the issuer shield them so that they can issue cards without actually even seeing PAN information. So we can help them issue a virtual card securely without them even seeing the PAN. We can help them push out a file to whoever their card production vendor is so that they're not exposed to the PCI information. And that routes itself back. And what we are helping our fintech issuers do is also enable and accelerate the processing of applications. So we have fintech issuers that we want to take more control. So they may want to not necessarily use an issuer processor per se, like an FIS or a TSYS and so forth. They may want to process the transactions themselves. So they've engaged us to help them on board with Visa DPS. And what Visa DPS allows them to do is to be able to take all that payment data that's not sensitive, that's needed, so that they can make a decision on the transaction. So we actually have proxies, an ISO 8583 proxy, to help shield and redact that sensitive piece. So our fintech issuers do not see the PAN, do not see the CVV, but they see everything else like the merchant name, the amount of the transaction, the time of the transaction, the MCC code, and all those things that are needed to make a decision whether to approve or decline the transaction. So we've done this for a number of our fintech issuers so that they can take greater control. And the reason why they do this is because, one, they want to reduce the reliance on the issuer processor, and two, they want greater control over the issuing, and they want access to their data so that they can innovate. And we actually help our fintech issuers to be able to achieve all these goals. Now, why is this important to you guys? Why am I even bringing up fintech issuers? Because I think it's important to be able for traditional financial institutions to be able to compete on the same playing field as fintech issuers. They're taking advantage of all these technologies out there, and I think these same technologies can be leveraged within a credit union as well as within a bank. Right? The large banks, the national banks, the top 5, top 10 banks in the U.S., they have the resources, they have the budget to be able to do it themselves. But when we start moving to the mid-tier banks and credit unions and below, there's a heavy reliance on other technology providers, but you don't have to rely on all of them, right? Because some of them, I think, aren't necessarily needed per se, because there's the whole data security piece of it, right? And at the end of the day, the data security elements in the data is only used for validation purposes. The real value in the data is everything else. So if you can help eliminate the burden and the scope of the data security piece, it helps you to accelerate your innovation, helps you to accelerate your product releases, and you don't have to put as many resources and budget to your innovation. And it's important because right now, fintechs, are starting to be, understand the different banking products that can be offered through their environment. So we want to be able to, from a VGS standpoint, we want to be able to even out the playing field so that everyone has access to it and everyone can innovate at the same level. So again, we covered onboarding. And then lastly, I just want to quickly go over the value proposition. So one, we can accelerate the process, providing PCI level 1 and PCI PIN compliance. Two, we enable shorter time to market. Three, we enable full ownership over your data so you can avoid vendor lock-in. You can access your data and monetize your data. And lastly, VGS enables issuers and processors to focus on their core business and not necessarily the business of securing data. That's all I have. Thank you very much. And I'll hand it off to Jeff for a Q&A.
Thank you, Wang. Thank you. Let me just ask you real quick if there's any one takeaway that our audience could get from your presentation. What do you think it would be?
You know, what I would say is focus on your core business. Focus on providing services and products and features that are meaningful to your member base, and make sure that data security doesn't get in your way in doing so.
Okay, great. Great. So that is about all the time we have. I'd like to thank everybody for joining us. We hope this was valuable to you. Special thanks to Wang for his time and insights, and BGS for their support. If you missed any part of this presentation, remember it will be archived shortly at www.cutimes.com/webcasts. So you can view it again or refer it to someone else. You can also explore other upcoming and on-demand presentations while you're there. Have a great afternoon.